Insurance for the year 31st December 2025. Before we start with our formal presentation, as we all know that there is an ongoing transaction which is happening for TPL Insurance between TPL Corp and Jazz International Holdings, subsidiary of Beyond Group. So I would request the CEO, Mr. Mohammed Aminuddin, to give us a brief about that transaction, and then of course we can discuss the presentation in detail. Amin sir, over to you.
Thank you, Ali. Just to recap for all the participants of this call, there is a strategic transaction that's currently underway, whereby Jazz, which is the largest telecom operator in Pakistan, also has a vibrant financial services business in Pakistan under various banners, including Jazz Cash and Mobilink Microfinance Bank, is looking to expand its financial services digital footprint in Pakistan and has made an offer for acquiring 75% shares of TPLI, which is our company, being a listed company. This is something that is following the process of the Pakistan Stock Exchange. Currently, we are currently open for the market tender offer, whereby the minority investors have been offered to sell their shares at the price of 30 rupees per share, and that is currently underway, and that period will close shortly. What this essentially means is that there will be a transition from an ownership perspective, whereby TPL Insurance will become a part of Jazz Group. And the structure that is currently envisaged is that Jazz will formed a holdco in Dubai called Jazz International Holding, which is then subsequently part of the overall holdco, which is VEON. And they are basically acquiring the shares in that investment vehicle in Dubai, which will also have other financial services entities like Jazz Cash and Mobilink Microfinance Bank, also part of the same cohort, essentially creating a financial services engine, working with the Jazz customer base, which is the largest in Pakistan with 100 million customers, to try and basically improve its financial services footprint. That is where we are in terms of the strategy behind the move. From a transactional perspective, this transaction is expected to close by end of June, early July. And on that date, the shares will be transferred between the existing or sponsor owners, which is TPL Corp, and the new buyers. So that's where we are at. We are in various discussions with the regulators for the requisite approvals, which have primarily been obtained. And we are well underway in terms of the integration. So various integration discussions have already started with Jazz, and we are working with the teams to kind of help us integrate into their ecosystem. So I think unless we want to hold questions for the last, I'm available if there are any questions. Otherwise, we can go into the presentation.
Thank you, Amin sir. I think if there are any questions, you can raise hand with me and we try to take those questions. Otherwise, we'll flow through the presentation. To start off, we will give you a market snapshot of the insurance industry in Pakistan and how we place ourselves along with the other insurance industries across the globe. So Pakistan is one of the least penetrated insurance industry, and if you see, we are at 0.3% non-life market penetration, which is well below the 1.6% average in the emerging Asia region where we operate in. And of course, we can't benchmark ourselves against the 7.1% global penetration level. But even for the markets, the comparable markets, the Pakistani market is significantly behind their peers. There are multiple reasons, and one of the main reasons is because the focus for our industry has always been on the corporate centric businesses. If you look at the Pakistan non-life segmentation, you'll see that fire and property and marine business, which is typically, or miscellaneous business, which is typically corporate business, is dominant in our industry composition as compared to the global averages. And even on the motor side or health side, majority of the businesses underwritten are by the corporates and not typically for individual customers. So the footprint that we have of insurance in Pakistan is limited to the documented corporate sector in Pakistan, whereas the entire population and their requirements for insurance and exposure and risk management is something which is not focused historically by the insurance industry in Pakistan. And that is and has always been our focus area, where we operate in that segment, and we are working to develop that segment for the past 2 decades of our existence. We currently hold 2% of the share, but like Amin was mentioning, that with Jazz coming in, the reach that we will have and the distribution channels that opens up for us will provide significant forecast or significant opportunities for the company to reach those retail customers where distribution has historically been a challenge. If you see the market as we see it, is that we have a huge population lying in the SCA, B, and C segments, where they have the purchasing power to kind of buy insurance products, manage their risks. And then, of course, there is an impact market as well in Pakistan, which is the lower middle class or the SEC D plus classes, where they require the risk, their risk management, but they don't have the capacity to get those. But there are products available for them where they can get coverages at a discounted kind of premiums. So these are the two markets that we focus on. So SCD and C segment, which is the impact market, and if we talk about the SCA and B market, which are the serviceable obtainable markets for us. What we call serviceable or obtainable markets is are people who are mostly in the urban sectors, who are digitally aware, who understand insurance. So they are the go-to market for us in phase one, and even that market is roughly around 1.4 billion or 1.5 billion. 1.5 trillion market, whereas the existing market size of the entire insurance industry is 300 billion. So there's a huge, even after scaling down our population to urban center areas and SCA and B segments who are digitally aware, potentially in insurance aware segments. And if we see tier one cities, there is a significant uptake that can be brought in to the insurance industry. So this is the segment that we want to work in and we want to operate in the long term. So that is something that we have plans for. The current insurance opportunities, if we start mapping it from our organization perspective. So motor insurance, of course, there are 30 million registered vehicles in Pakistan. Hardly 900,000 are insured. So those 3% insured vehicles are roughly 40 billion of premium. So if you, of course, populate and project the entire population to a certain level of compliance, it gets 1.5 trillion opportunity on motor only. And that's not the high-end kind of comprehensive kind of products, but the basic motor, the third-party liability kind of mandatory insurance products that can take us to that level. There are some interventions that have been made by provincial government because motor insurance is a provincial subject matter. So, Sindh government has taken an initiative this year in March where they have made it mandatory for all motor vehicles in Sindh to have mandatory liability insurance to register their vehicles, B, to transfer their vehicles in their name or in others' name, and C, to pay taxes, annual taxes. So it's a mandatory check on the system of Sindh Excise now, where you need to have a motor insurance product. This is an initiative, of course, which we started with like-minded insurance companies, and now it has started shaping up. And Punjab and Islamabad Capital Territory are already working on similar arrangements. And it's right in hindsight that we will be getting a mandatory motor third party liability, which is, of course, by law required, but enforcement was always an issue. Similarly, Pakistan has a huge agriculture sector for both crop and livestock. It's significantly underpenetrated at the moment, roughly 4 billion worth of premiums against if we look at the entire agri sector with an opportunity of 600 billion. Around 9 million outbound travels annually, hardly any custom insurances, 155,000 policies sold by the entire insurance industry only against a 9 million outbound travel. 190 million or 170 million in some cases mobile users in Pakistan, 200 billion plus protection device protection premium opportunity, 0% coverage. So the reason for this is predominantly the distribution channels were historically not available, and as we see more digitalization and initiatives coming in from the regulator, these um, so these products have started popping up, and there is traction coming in for all of these products. So retail segment is something is the retail products are something that we want to take to the market and push to the segment that we just discussed in the previous slide. So in terms of where we are and what happened across 2025, what we did, where we stand in terms of the retail market. These are some of the products, unique products that we have launched in the past years that have started shaping up. So from domestic bus travel insurance to air travel insurance for, of course, for domestic passengers, from bike insurance to pet insurance, from women shield, women specific health insurance product to domestic staff insurance products, from making your own car product to cyber insurance. So these are all unique products that we launched in the year 2024 and 2025, which benefited and we benefited from these products in the last year. And there, of course, these are not, and this is not complete list. There are, of course, other products as well, which we have started marketing to the various customer segments. If you talk about our channels, banking is one of the largest channels. We had a growth of 24%. In the last year, banking industry generally was, insurance to banking was struggling for the last couple of years. We work with around 13 banks. These are some of the banks where we included new products and started rolling out different initiatives in the year 2025 and 2026. As of course, also there are a few products in the works, and there is a constant growth trajectory that we see in this segment. Similarly, for the retail segment, which is predominantly the auto business that we underwrite through dealerships, saw a growth of 48%. This was mainly because we started off certain initiatives with auto manufacturers for the vehicles that they are now offering on installment. So in the year 2024, this initiative was started initially with Honda, and now we work with 8 partners where different within different auto manufacturing alliances, where the auto manufacturers are providing vehicles on installments, and we are sharing that, and we are of course ensuring that those portfolios not only for auto insurance but also for the installments and the credit and risk that these auto manufacturers are taking. I think there's a question. If you can quickly, of course, ask Yashpal.
Yes, sir. I want to ask about that. How do you see the acquisition by Jazz for future growth of the company?
All right, sure. So I think we touched upon it briefly. Like we said, that there is a huge potential on the retail side in Pakistan, retail insurance in Pakistan. That's where the biggest opportunity lie. And historically, the challenge for insurance companies was the distribution. That distribution of policies to the masses through various means to B2B2C channels was not very cost effective. B, it was there were no such challenge other channels other than the bank assurance, which historically insurance companies have used is typically in the life business. So when we talk about telecoms have a huge penetration in the retail segment across the country, across all socioeconomic segments. So the opportunity is huge because we can decide on which socioeconomic segment we want to promote, which product, how to tap them. We will of course engage with telecoms to use their data to identify the customer pockets or customer leads or that we want to tap. We will of course request them with data, and we have already started some engagements on that front to see how we can improve our, of course, distribution to the telecoms as well. They work on multiple ways. I mean, calling is not the only channel. There are other ways to connect with those customers. So the opportunity size is huge, and retail is the focus area. But again, with this acquisition, it's not only the telecom customers that we are looking at. Jazz typically have a huge a mobile wallet base as well with their Jazz Cash customer, around 50 million Jazz Cash customers. They operate in the microfinance segment as well. They have a significant penetration in the microfinance segment, and also on the corporate side because they work with large corporates on various different fronts, not only as a telecom provider, but they have their IT infrastructure services which they provide to different corporates. They have other, of course, services which they provide to corporates as well for from a data center perspective and all. So the engagements, of course, that we can initiate using their customer relationship is much higher as compared to just telecom. And those are all the opportunities that we are mapping. And we, of course, this transaction is expected to conclude in the month's time. We are already, of course, public offer for the mandatory shareholder is already in the public. Is effective. So once, of course, the transaction concludes, the opportunities will start rolling in, and of course, I mean, we will show the numbers next year. But that is something which we will, of course, we have already started working in, and for the next 6 months, you will see a lot of changes and difference in our results going forward as well. So moving on, our digital initiatives. This is an area which is, of course, close to our heart. It's not. These are the policies which we are selling through various alliances. We did 36 million policies last year through various interventions and integrations. There are all different, of course, products that we are working on with other partners as well. So it's an ongoing exercise. We are constantly increasing the number of products and partners and number of policies. So these are normally small ticket size policies. The revenue is not huge. A small period as well. So these are not typically like 1 year insurance policy or 3 year insurance policy. These are 1 day, 1 month. These are policies like if you're on a motorway, you start the insurance when you get on the motorway, and the coverage ends when you exit the motorway. So these are small ticket, limited time policies, and that's an area which we are looking to grow. And of course, Jazz, like we were discussing, Jazz Network is going to help us out with time on this as well. On the corporate side, we had a slightly muted year last year, especially when it comes to the broker business. As you all know, last year there was a decrease in premium or risk exposure, especially on the IPP side and certain other ancillary and allied industries. So that was an impact which we absorbed last year. So we had, but this is of course not the major business segment for us. This is 30% of our total portfolio. So the business was down on the corporate front, mainly on those. But that's something which, of course, we are looking to recoup. And in the first 6 months, we have Alhamdulillah, generated good premiums on the corporate side as well. Uh, Moving on, contact center, of course, continues to be our one of our major revenue generating unit. We are constantly improving our contact center premiums as well on a year-on-year basis. This is mostly the direct business that we underwrite through our call center. And this is not the digital small policies, that is a separate segment, but these are the normal 1 year policies, like motor, health, and travel kind of products that we do, and also the renewals that we share. In terms of our financial portfolio, in terms of our total portfolio on insurance, 70% was motor insurance, 10% property, followed by miscellaneous and health business, 7% each. Agri is a core focus area going forward as well. This is an area which we think would grow significantly. This is an area which government is also working on growth. This is a provincial matter. We have certain products that we have pitched to various governments as well. Similarly, on motor, this continues to grow. However, the focus is not only on the motor segment. We are constantly looking to grow our miscellaneous and health, marine and property business as well. If I talk about the overall premium growth, so we had a 15% growth in 2025. The net earned premium growth was around 27%, 26%. This is predominantly because of the retention that we have, the extra retention that we had. Like I mentioned, that our focus was more on the motor and health side last year as compared to corporate, where we lost some account. And corporate is typically lower retention, so most of the premium is ceded to the reinsurers. But we manage higher premiums on the lines where we retain more, and hence a 27% growth on our top line. The claims were, of course, in line with the growth and the extra retention. Our net premium, the overall growth in terms of, premium reflected the reciprocal increase in claims and commission. Management expenses were increased by 19%. Again, that was an efficiency improved by 3%. So our combined ratio, which was around 109%, was brought down to 106%. We are constantly bringing it down, and the anticipation is that by the end of this year, we should have a combined ratio between 100 and 102%. So the business operating profit for the year 2025 was 56 million as compared to 145 million last year. That was predominantly because of the reducing investment income rates. Our investments are mostly an interest-bearing account, and as the interest rates went down, the investment income, of course, went down as well, resulting in a decrease in profitability. We constantly try to stay active and create awareness in the market at different forums, through different means, be it digital, be it our leadership team going out in market and introducing insurance at different forums, be it digital mediums to explore, of course, opportunities to showcase our products. And similarly, in the mainstream media, like press releases and radio interviews, we did not do any TV campaigns like we did in the year 2024. Otherwise, we tried to be project our products wherever we can through different channels. This is an area which of focus, and a lot of investment is going in that area. So we have started adopting AI at all our departments. This is just a snapshot of what we did in the year 2025. So there are a lot of initiatives across all departments, be it marketing, underwriting, claims, finance, even sales, that wherever we can use AI to automate basic tasks and reduce the TATs for our various operations and improve customer experience. We are using it, the AI, and of course, a lot of other projects are also in the process. Similarly, for other digitalization projects, we have a digital team that is converting our entire processes through digital. We are transforming our processes digitally. All our approval flows are now digitized. We don't have manual approvals. Our onboarding of agents and different partners and salvage buyers and surveyors and hospitals and all of the partners that we work with or the vendors that we work with is digitalized. All the KYC procedures are also through a digital mechanism. We don't do any physical KYCs. Even if we receive a physical KYC from a customer, we try to, of course, do run the automatic process to um, ensure compliance to a digital manner. So all of the processes and mostly on the operation side, are now transformed into digital processes. And we have a proper project management system that we have deployed last year to improve the entire process of digitalization of the company and with the various initiatives that we are taking um, to improve our sales and our customer experience and to tap our further customers. We have deployed a CRM, which is HubSpot, and we have onboarded. Most of our sales users are mapped on it. Marketing campaigns are now mapped on it, especially the digital campaigns, and even the dispositions and the call, all the interactions that happens with our customers, be it for complaints, be it for calling or to customers for renewals or the leads that we are generating the digital means. If we want to close those leads and convert those leads, all of that is currently happening in the HubSpot. And we are, of course, trying to implement that on our corporate accounts as well. And we are gradually trying. This is something which generally is not used in the industry. So it's a new for the corporate customers as well, and that is where the focus is this year. That we will implement this across all our channels, be it digital or non-digital. So the customer experience that we have should be the same across the board. It of course it helps us in unified, of course, it's a unified platform where all our services are connected through this platform. And the tags are being monitored. Any red flags and any tag is raised by the system, so an intervention can be made and the problem can be solved immediately. So this is it on the presentation. Any questions, anything that we can take? We're more than happy to take any questions. Okay, interesting. I think this is it then. If there are no questions, we can conclude this meeting. All right. Thank you, everyone, for your presence. If there are no questions, we'll conclude it. Thank you.